Isn't this odd? Pretty much everything in the last week went down, but there is WhiteRock, which appreciated massively. Now the question is, why is that? Who is buying here? Who is selling here? And how much higher could WhiteRock go? Let's have a look at the on-chain metrics, the data most people are not looking at. Now in the last week, we went up by 168%, but that appreciation did not happen without volatility. There were massive pump and dumps. The question is, where does this come from? WhiteRock is now the 19th largest trending token on the Ethereum chain with a liquidity of 2.1 million. Here's the volatility I'm talking about. Within a single hour, the token crashed by 50% over here, or over the span of 8 hours by 50% over here. Today, the price is going down, despite there being way more buyers than sellers. So 1,038 wallets bought the token, only 606 sold. Yet the buying volume is smaller than the selling volume. The price is going down. The story is quite impressive. A decentralized finance protocol that allows to buy stocks and bonds on chain. So a swap from Tether to Apple. But how legitimate is this really? On chain, we've got more than 23,000 holders. On X.com, formerly known as Twitter, we've got 41,000 followers. Now that's odd. Why do we have more followers on Twitter than we've got holders on chain? This is not usual. Let's have a look at who owns the tokens. Interestingly enough, there is a single wallet that owns 35% of the token. Now this seems like some kind of vesting unlock. On cryptorank.io, we see that 65% of the supply is public, and there's another 35% that will go to core contributors, to an airdrop, to marketing, and to future private sales and treasury. So maybe that's the 35% that's shown over here. But interestingly enough, this is not different wallets that hold this. It's all just a single wallet that holds all of that supply. Now I try to always be very skeptical because most altcoins tend to underperform Bitcoin most of the time. Most altcoins are not a good investment. So I need to be convinced that an altcoin is actually worth investing in. I don't per default try to bet on altcoins and have a broadly diversified portfolio. That tends to not do too well. Now here's another red flag. We do not see WhiteRock on DeFi Llama. This is where most large decentralized finance protocols are listed. And so it's better probably to proceed with caution. Let's just work with the assumption that this protocol is 100% smoke and mirrors and that it's going to be traded like a meme coin. That doesn't mean we can't make money from it. It only means that it's not just a long-term investment that we buy and hold over several years. Let's have a look at the on-chain data in more detail. So again, we've got our more than 23,000 holders. What we're seeing over here is the number of small retail investors versus whale investors. And the way we make this distinction is by looking at minimum holding thresholds. So how many WhiteRock tokens are held in a particular wallet? On the left side, that's 600,000 tokens. So at the current price, that's roughly $1,000 worth of the token. This did grow quite consistently over time. Now in the middle, we go at 10x in minimum holding. So that's now 6 million. So $10,000 worth of the token. On the right, another 10x. So that's now $100,000 worth of the token. Now this split up is not necessarily natural. First of all, we do not see any accumulation at all by the whales in the last few days. While we did see it with medium-sized retail and small retail, that's uncommon, but also the ratio of those numbers is uncommon. Seeing a third of the wallets that hold $1,000 also hold $10,000 is very, very high. Going another 10x and then again seeing roughly 1/4 of those wallets holding $100,000, that's also not natural. I'd expect that this distribution is way more steep. There should be way less whale wallets. And the number of medium-sized wallets should also be much smaller relative to the small retail investor. So something seems to be off here. Something is artificial. The trading volume also comes in quite strong waves. And usually we want to buy when the trading volume is low, not when it's high. Here's the number of buyers and sellers over time. This comes in spikes, and this could be due to marketing efforts. This could be due to influencers promoting the token, but it could also just be plain manipulation. The centralized exchanges are quite careful with the token. Yes, the token is listed on Make.C and Gate.io, but still most trading volume happens on-chain on Uniswap. There are perpetual futures, but they are comparatively low in trading volume as well. The story of WhiteRock is definitely impressive. Trading traditional finance assets on-chain is a market need. The The problem is always regulation, right? Binance tried to get into that space several years ago and then had to bring it down due to lawsuits by the SEC. There is a potential that this whole business model will restart again, but I'm not sure if WhiteRock will be the project to execute on this. Now, the vast majority of people in crypto approach the market in the wrong way. Most people try to find those multiple X returns. They try to find the few assets that make outsized wins. But this is clearly a game against the odds. Most altcoins tend to go down massively. A 70% decline over here, another 80% over here. It's all double-digit losses. Now, the common counter argument is that maybe we don't just buy one or two altcoins, maybe we buy multiple and then we might get that high flyer as well. But the problem is that diversification, so spreading the risk across various assets, does not work with altcoins. Everybody can launch an altcoin. Everybody can increase the supply as they want. And so in aggregate, the altcoins tend to do worse compared to Bitcoin and Ethereum over the long term. What we've got over here is the others dominance. So how much of all of crypto is in the altcoins that are not in the top 10? And 3.5 years ago, this was still at 19%. Now it's below 8%. So had you invested in a broadly diversified basket of altcoins, you would have on average underperformed the market by 60%. Instead of trying to find the needle in the haystack and most likely lose, at least in the long term, isn't it better to try to get the odds in our favor? If most things don't perform that well compared to Bitcoin and Ethereum, if a lot of altcoins inflate in supply over time, so supply grows faster than the demand, then why don't we bet on relative valuations? It's a bit more complex of a game, but I believe that this added complexity does help. We want to make our investing as simple as possible, but not simpler than that. And so here I am doing something differently to most other YouTubers. Most crypto YouTubers, they just show one single win. They say, here, I made some money over there. Just trust me, bro. Very few are willing to share their trading history. Now, here's my trading history on Hyperliquid. This is where I started trading decentralized perpetual futures. This is the profit and loss. And the maximum drawdown was only 5.1%. Now, obviously, I'm not going to share my positions open here on YouTube. That's part of the premium membership. It's down below. It's thebitcoinstrader.com. Now, the issue with trying to pick the winners is, of course, that we have a very low chance of succeeding. But the beauty of crypto is that it's still an incredibly inefficient market. People always say that capital markets are efficient, but in the end, it's the people that make it efficient. So if you know more than the average market participant, if you do more research than most people, if you're part of a group of people that do more research than the average market participant, then we can win. Then we are the people that make the market efficient, then we are the ones that make the profit. For example, this here. This is pure inefficiency. This chart shows the balancer token relative to Ethereum. A very constant underperformance. And we can make money from that underperformance. As the price is going down, we are printing money. Yes, we are betting on falling prices. And yes, this might be a bit more scary at first if you don't know what you're doing, if you haven't yet learned about this whole topic. But the risk is every now and then a potential short-term pump, again, when we bet on falling prices. But the reward is a very long-term constant trend. We can also turn this chart around. So this is now Ethereum relative to balancer. So basically buying this when we long one asset and short the other. So the inefficiencies are not necessarily that obvious in the macro, as in the market is expanding and contracting in a way that's not that predictable. But the relative valuations are much more predictable. The risk to reward in a chart like this is quite obvious, isn't it? People make all kinds of mistakes. People, for example, also just leave their stable coins in their wallet. Right? Let's say you trade actively, you've got some stable coins, and you don't use this for anything to add some additional return. That's also a mistake. For example, here we can get 15% APR by providing liquidity to Hyperliquid, the largest decentralized perpetual futures exchange. It's comparatively safe. It's definitely worth the risk for 15% APY. And so this is then the feedback that I get in the chats. It was the first nice trade. Thanks, Gerhard. Then over here, a few more positive trades, etc. And people make their money back very quickly. Premium has already paid for itself. And yes, if you've only got a few $100s in crypto, this is probably not worth it. But if you're investing several thousands of dollars and you're still inefficient in your trading, if you still hope for your one altcoin to outperform, it probably makes sense to learn a bit more. And this is what I mean by learning. I've published more than 100 tutorial videos on various topics within crypto, on how to use relative valuation bets, on how to manage risk, on how to do on-chain analytics. Feel free to binge watch all of this. And of course, I'm also sharing my own trades. So for example, here is a trade opened on the 30th of April. And here's then how I closed this 5 days later. Yes, this is only a single example, but that's why I showed the overall portfolio chart before, right? This one over here. And so feel free to check it out. It's currently $125 per month. It used to be 165 when everybody was super hyped about crypto. Currently, the attention on crypto is rather low, and so the price is also lower. If you lock in that price now, you will not be affected by the price increase that might happen once the market picks up again. So everybody that signs up locks in their current rate. If it's your first time here, feel free to subscribe. I publish here regularly. Like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. There should be somewhere a card over here. You can just click on that and it will lead you directly to the sign up page. So see you over there as well. Cheers.